Let's take a look at what happened with Tesla today. So we closed at 231.01, down $11.97, 4.79% down. Post-market, we seem to be down by 76 cents. In addition, so let's take a look at what this means on the chart. Let's look at the facts, and then we can look at the different buying or selling opportunities. So the facts first. Facts first, we are into a downward channel. Tesla is going down. That's a fact that has been true since December 18th. December 18th, last year, we have been coming down on a regular basis. This is the downtrend. We are into a downtrend, going down like this. This was not fast enough. This bearish channel right here was not fast enough. We started to go a little bit faster than that. We are pulling back up a little. The bottom here is at 217.65 and the top is at 252.14. So we had some indication that things were improving. The lows were getting a little bit higher. This is no longer true. That's fine. We were going to maybe buy if we were going to cross 252.14, which we did not do. We did not get cut in the wrong side of the road. No wrong side of the road. If we go on the 1 hour chart, this is the small bullish channel on the 1 hour chart that we started forming since March 11th. Started to climb, but we still had the 252.14 as resistance right here. That is still in effect. Now the climbing is gone. So we have gone outside. So this is in fact a weakening. This is a weakening. We had the break below 238.09 during the day. This is a sell signal. We have no stochastic and we are moving through closing below a horizontal resistance. So this is a sell signal. We are having a little bit of a pushback, still below the 21-day moving average and still with stochastic below 60. So we should be continuing lower. This is what should be happening. And if that continues as planned, then we should be revisiting 217.65. Let's take a look at the rest of the market. VIX cooling down. So this is helping the market as a whole. VIX cooling down by 1.28. It's still at 20. It's still not at a super good place. Bonds cannot get higher than 4.33. So we like this. This should be helping the stock market as a whole. Let's take a look at Dow Jones. We are having a little bit of a move up. Without stochastic over 60, we could be pulling back to the moving average and then continuing a little bit lower. So this could be what is happening. We could be crossing it a little bit too. But until we get stochastic over 60, we should not consider this a move up. We should just consider this. This was a breakup structure. We should be thinking about shorting this thing unless we are proven otherwise. And we could be pulling back. We could be pulling back to the moving average or to this one right here. If we start pulling back to this one right here, then by that time we should get stochastic over 60. So I will change my tune if this happens. But so far, I am considering this just a pullback. S&P 500, the same thing. A little bit of a move up, but this one is quite weak because we cannot break above 56.72 right there. So far, this is a really weak pullback. Dow Jones, not too bad. This one, not too good. And the NASDAQ, also very weak pullback. Cannot get back into this big, huge bullish channel that we had not too long ago. Russell, this one is pulling back too, but still into a downward channel. So this is just a pullback probably until this level right here before we are moving back down. If we break through, then we are going to change our tune. We don't need to be in the fence. It's pretty clear. When you do your lines correctly, they are guiding your decision. If we break a line, we do something. If we don't break the line, we don't do anything. Super easy. Let's take a look at some Tesla news that we get in our Discord server channel. We have automated channels where Tesla news are being pumped. The Tesla quarterly results are being pumped and also Elon's Twitter. And we also have news for stocks that we are following that are getting pumped here automatically. So no need to look, you get all the news. And there's a video that has been made by a very famous YouTuber, Mark Robert, who makes really nice engineering videos and everything. And he tested the Tesla autopilot using only cameras as compared to a Lexus using LiDAR. And he is testing both cars in 5 or 6 different scenarios. One that is very telling is that he has printed the picture of a road into a big styrofoam panel to try to fool the Tesla car into thinking that the road is continuing where there's this styrofoam right there. So the Lexus stops in time and the Tesla crashes into it. But if you look at what's happening with the crash, this zigzag looks like it was made by hand. I don't think that if a car would go through a big styrofoam plank, I don't think it would do something like this. I smell something funny here. I'm not saying that the Tesla car would have seen the panel. I think that they might have done this because they did not want the panel to break into or something like this. But there's something fishy here. So anyway, this is the type of exposure that will not help a Tesla stock. And also, Luminar shares soar after viral test drive video featuring LiDAR technology. This is giving a lot of credence to LiDAR technology, and this is not helping Tesla at all. So still not the best days for Tesla stock, but it's okay. It's okay. We don't need to be in the stock. We have our criteria. We need to have a stick over 60. We need to have Tesla outside of a downward channel. And then we need to have Tesla cross a horizontal resistance. Only then we are going to consider buying it. So we don't care. We don't care if it falls down to $2. In fact, we would love it to come down to $2 and then come back up again. If you are holding a stock, my personal opinion is that you should not hold a stock in a downtrend. There's no point. Get your money out, wait for the downtrend to be over, and then get back in again. With the same amount of money, you are going to buy a lot more shares. If you own Tesla right here at $484, it is now down to $238. You will have to recuperate everything. Instead, buy it when it goes up, when it starts to stabilize, and stochastic over 60 is a great indicator. If you only look at stochastic over 60, you are going to make so much more money. If a stock loses stochastic over 60, sell it. As easy as pie. This is brain dead. Anybody can do it. Thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. Click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow, and I'm going to tell you à la prochaine.